Good morning, good morning, everybody. Welcome to the pre-market prep session for August 13th, 2024. This is our daily session where we go over the important news, notes, analysis, trade ideas that are key to making sure that you are consistently profitable here in these markets, despite all the craziness that we have going on, right? And again, we are living in the craziest times that have ever existed. We've got constant kind of world shaking news in a train nonstop. We're in the middle of an election year all the way around the globe. We've had election controversy. We've had campaign controversy. Even here, our election is shaping up to be more like a third world type of election in terms of what's been happening than a first world one. Candidates ducking out and new candidates rising and all these things going on. But it's important that you make sure that you're aware of what's going on through all of this in order to give yourself the best opportunity to succeed, right? The only thing we can do here during these circumstances is manage risk, stay on top of what's going on, and take care of the little things, right? It's all a game of probabilities. And that's something that you can do to emotionally release yourself from outcomes is you make sure that you, number one, put in the effort on the front end to make the best possible educated guess that you can. Um, Number two, make sure that you are doing the little things mindset wise to make sure that you're not expending more mental capital than you need to or making decisions based off of emotion instead of logic. And number three, stay abreast on what's happening. Right, that's all you can do. Stay abreast on what's happening. Make good, educated decisions based off of quantitative, measurable factors. Right, and take care of the little things. And over time, right, you'll do great. But if you find yourself struggling, sometimes it'll be due to the fact that improbable things happen rather than probable, but the majority of the time it will have to do with the fact that you're not taking care of little things in order to give yourself the best chance to succeed. Right, you coming in and just kind of straight up just bare bonesing it and walking into markets at the bell and just expecting something good to happen is never a good idea, right? And that's why I do these sessions. They won't happen forever. They won't be here forever, right? But that is exactly why I do these sessions, is because you need to make sure that you're aware of what's happening in markets before the market opens, right? As well as the sentiment that you carry into it. So we're here for this session to get 1% better and 1% better only. That's the goal. We're not here to cure dementia. We are not here to put life on Mars, right? We are not here to figure out if Einstein was right with this theory of relativity or not. We are here to go to sleep better than how we woke up. And if you do that enough times, right, you get better over time and you start to achieve the goals that you're looking to achieve. And then you start doing things in a shorter amount of time than you ever thought possible. I built something yesterday in the shortest amount of time that I think I could have built it. And I was like, wow, I cannot actually believe that I got that done in that period of time. But I have been getting consistently better in that area, right? So it's like you start to shock yourself with what you can do, but it's not really shocking because you're doing the work, right? You're doing the work just a little bit at a time to get a little bit better. We've got good news here this morning, right? With Chipotle's CEO, I guess, being appointed as Starbucks' new CEO, Starbucks gapping up, and Starbucks cashing us out on our leaps, right? Starbucks is something that we've been on since July, mid-July to toward the end of July. We played Starbucks. We were in for that first big news pump, right? Cashing us out short term, and then the leaps, right? Entering leaps there, a year out, and then leaps in for December 2026, at the beginning of August, just on the when was it? Probably the 4th, August 4th, and that was how many days ago? 11 days ago. So it might have been 2 weeks, not the 4th, the first week of August. So that second week of August, a week ago, 2 weeks ago, on Starbucks again, right, with another set of leaps, and Starbucks coming through with the news, and this is again not coincidence, right? It's not coincidence that you are in position. The charts tell you a news is most likely to be dropped, right? The charts tell you because they say there's a very probable chance that we hold support here again. And then you have the potential setups, right, that I outlined, these potential bullish reversal setups on multiple time frames. And then you start to see the picture unfold where you know where Starbucks is going to drop news. You don't have to know what the news is going to be, but I know that for some reason, one way or another, based off what the charts are telling me, the stock is going to pop from here, right? And that's how you can kind of predict when news will come in because they also have people at these companies that can break down charts and they say, hey, we're at a really great spot where if we drop some news, we'll have some buyers come in, right? And this can rocket our stock higher. That's exactly what Starbucks did, right? We put ourselves in between Starbucks goals and the money. So when Starbucks goes to reach their goals, they carry us along with them to the money. That's where you want to be, right? Proactively positioned. And there's no amount of money that, it kind of suffices the cost to do that, right? The ability to position yourself in a place where you are always valuable and money always flows through you is invaluable, right? If someone told me I had to pay 100K to do it, I'm going to do it. Someone told me I had to pay 200K to do it, I'm going to do it. Luckily, the cost of that is nowhere near that, right? But you have to make it, and you also have to be consistent with it. So that's my big message is that you see things continue to pay. You see us continue to get lucky being in certain things, right? Where news comes out or this happens or that happens. And it's not luck, right? Luck is when preparation meets opportunity. So prepare, be ready for when the opportunity comes, and then you're able to strike and capitalize, right? So let's dive into what we got going on this morning. Good morning, everybody. Coco, Andrea, Michelle, Rob, Alicia. Good morning, all my beautiful people. Let's get things rolling here with our top news: retail on the radar. This week is all about retail, especially for investors who are hoping to get a better assessment of the U.S. economy. Kicking off the festivities today will be earnings from Home Depot, with comparable sales shedding a spotlight on the current spending habits of the American consumer. Walmart, ticker WMT, will also report quarterly results on Thursday, the same day as the July retail sales data will be published. Speaking of macro, nervousness has been present in markets since July. Since July's weak jobs report that highlighted rising unemployment. It helped volatility spike last week. And while stocks have since recovered from a major sell off, the situation remains fragile. Yes, very fragile. We are in a spot where the probability to head lower is higher than the probability to head higher, right? And we're positioned as such. If that ends up not happening, then it is what it is, right? We've managed risk accordingly. But as of right now, you are in a spot, the market is in a spot where the risk to reward is much better to the downside than it is to the upside. And that's the fragility of where we're at is really demonstrated by yesterday's price action. All the rise that we've been getting, the rise in buying volume has been decreasing each and every day, right? Very eerily reminiscent of a daily bear flag, right? And then you have the build up. We dropped yesterday morning, made 80% on lottos, right? Nice day trade. You're done in 20 minutes. Then we rise for the next hour. We rise $5 on SPY over the course of the next hour. Then we have one 5 minute candle where in 3 minutes of it, we drop three whole dollars on SPY. That's where we're at, where it's like the movement up takes forever and it's very labored, and it just seems strenuous. And then the movement down is just like, I don't even know. It's like ice skates on butter. It's like whatever the most zero friction thing is, that's what the movements down are. It's just woof, right. So which one do you feel more comfortable holding? You don't want to be loaded to the teeth in either direction. But based off the price action that we've been seeing, I feel much more comfortable being positioned to the downside than to the upside. Um, Fears could reignite if there are further hints of a slowdown, especially since consumer spending accounts for more than two-thirds of the economy. And that's, some data that we get this week. So again, we'll see if we have data that starts to become more important than it has been in the past. But the figures could also provide reassurance if the numbers go the other way. The same situation will play out tomorrow. A hot consumer price index report could push stagflation fears back into the market or even cause a resurgence in recession worries. On the other hand, easing price pressures could calm investor nerves and may provide a relief rally, especially if positive retail earnings heat things back up. See, this is where we diverge, and I'll talk about this in a second. A report by the New York Fed yesterday also showed the three-year inflation consumer outlook hitting a record low, which will be yet another factor in expectations about whether the Fed will embark on a rate cut cycle as soon as next month. Here is the issue, right? And this is when you have to start again thinking deeply beyond just what happens in terms of the data and the numbers that are released, and thinking about on the surface level what they mean. Normally, you think, okay, we get hotter, than expected CPI numbers. That's bearish, right? We don't want inflation to go up. Um, we want inflation to go down, and then the Fed is, going to, if inflation goes down, then the Fed feels like they have the ability to cut. Sentiment right now is being processed in the opposite way, right? There is heavy, heavy, heavy pressure to cut. Everyone thinks that the Fed has waited too long, right? Everyone thinks that the Fed has waited too long. And the issue is that if CPI data comes in at better than expected, right? And let's say that that means that inflation is going down. Um, I feel like then the Fed thinks, okay, well, maybe we can actually keep these rates higher for longer because the market can stand it, right? And we're doing our job and we're getting closer. We're in that spot where we can get kind of inverse actions to what is happening, right? Um, and it's because the whole thing is that, Powell, we haven't been getting consistent readings when it comes to inflation of it going lower, right? And Powell is in this spot where, he might say, oh, well, actually, the labor market is strong and we're getting closer, we're getting closer, we're getting closer. So we might not have an immediate what we think is the typical reaction to the data that we get, right? If we do get data that is better than expected, right, that might not have the reaction that we are expecting. Last time we got CPI, data release, it wasn't the reaction that we were expecting. So don't kind of look at this as, oh, okay, if we get better inflation, then we'll go up. If we get, worse inflation numbers and inflation has gone up, then we'll go down. It's not going to be that simple this time. It wasn't that simple last time, and it might not be that simple this time. So just understand that and kind of process things accordingly. Don't just say, oh, right, inflation was less than expected, we're going to go up. Inflation was more than expected, we're going to go down. The reverse happened last time, right? So just you want to be ready for both and manage risk accordingly. A hot consumer price index, we already went over that. Seeking alpha commentary. Quote, we may see more volatility in the days ahead as bears attempt to sway investor sentiment by wrangling over how each economic report is either inflationary or recessionary, but there are likely to be failed attempts to breathe life into a narrative that has fallen flat or nearly flat for nearly 2 years now, wrote investing group leader Lawrence Fuller. Quote, if you forecast a recession or an end to the bull market, you will eventually be right, as both are natural stages of each economic and market cycle. If you are early by a year or more, then you are not doing anyone any favors, including yourself. Wholeheartedly true, right? You're going to be right at some point, but you're going to have missed out on so many gains that it doesn't even matter that you were right. So again, I think the idea of anyone being a bear or a bull is foolish. We're kangaroos. We go up with the market, we go down with the market, right? We call the market top, and we want to make sure that whenever the market bottoms, we're there and we're ready for that. But as of right now, that's not looking like it's the case. If we do get movement, this week that says, okay, that is more than likely the case, then cool, I'm on that side. But for right now, that's not where the probabilities lie. So you're going to find me lying with the probabilities each and every time. Consumer news, not just coffee. As activism envelops Starbucks, the coffee chain is apparently weighing whether to add Elliott Investment Management's Jesse Cohn, to the board in a potential settlement. Nothing is certain at this point, but Elliott may also propose divesting the coffee chain's China business, which would echo the spinoff of Yum Brands, ticker YUM, business in the Asian market. Another activist investor, Starboard Value, has also taken a stake in Starbucks, but it's unclear if it intends to push for operational changes despite the company continuing to log successive quarters of falling sales. Yeah. This isn't even the big news that has to do with Starbucks this morning, right? Starbucks hiring what is it, the former CEO of Chipotle? I believe. So this news probably dropped after this went out. Yeah, appoints Chipotle chief new CEO. So Chipotle, as you know, has been very, very successful. Chipotle's stock has been a great, hold over the course of the long term. Ever since that, E. coli snafu back in the day, Chipotle has been on an absolute tear. And they're doing a lot of things right. And Starbucks is looking to, bring some of those things over to its brand. So, Starbucks up big here this morning and looking to make it a nice morning here with our Starbucks leaps. So once again, right in position here for what we need. And you love that. You absolutely love it. Aviation news, Mayday shares of JetBlue are still under pressure after cratering 21% on Monday for its largest session loss on record. The catalyst for the plunge was a plan to raise more than $3 billion in debt, the majority backed by its loyalty program called True Blue. Included in the proposal was a $400 million convertible note offering to repay maturing bonds, but the move triggered a credit downgrade at all big three rating agencies. Among the concerns are weakened credit metrics, negative free cash flow, and pressure on margins on earnings. Yeah, had no idea that that happened. Wasn't even on my radar. And I think what's important about that is that it underscores the fact that you will never be involved in each and everything that happens in markets. I used to be miserable and I was doing very well trading, right? I used to be miserable because I'd see that something happened and I was like, man, why didn't I catch that? Who the heck are you supposed to be? God? Right? You have no idea of what's going on in every part of the market at every single point in time. No idea. You're going to miss things, and that is fine. That is completely fine. You know why it's fine? Because you're never going to get everything. Never, never, never. It doesn't matter if it was you and you had a team of 100 people trading for you, you would still never hit everything. Even if you had a team of 1,000 people playing for you, you would still never hit everything, right? These huge firms on Wall Street, they don't hit everything, and they've got tons of people working for them. So I'm completely fine with the fact that there are going to be things like JetBlue cratering 21% that I'm not a part of, right? And you have to be comfortable with that as well as you continue to progress, in your trading journey. It doesn't mean that you're fine with missing out on everything. Like, hey, Adam, I missed everything, and I'm fine with that. No, right? You want to be putting your money to work for you in markets because there's no better way to put your money to work for you. But you're not going to hit it all, right? You're not going to hit it all, and it doesn't mean that you are less of a person or you're not smart or you're lazy. Um, it's just the reality of life. Consumer news, price wars to lure in price sensitive consumers and compete with McDonald's $5 meal deal. KFC, whose ticker is Yum, is expanding its $5 value menu to include chicken nuggets in the famous bowls. Fast food chain will also offer free delivery on Thursdays for any order on the KFC app or website starting September 5th, coinciding with the start of the football season. Competitors like Wendy's and Burger King, whose stickers are WEN and then Burger King is QSR, have also introduced their own value meal offerings after the success of the $5 meal deal at McDonald's, which is said to have boosted foot traffic by luring away customers from rival chains. Yeah, it makes sense. Like, and it's crazy that all these fast food restaurants have like thought that it was okay to evolve beyond being a fast food restaurant. You're fast food because we can go there and get cheap crap, right? That's literally the only reason why you exist. So if I pull up to a fast food place and I'm getting food for myself and I'm leaving and it's like $15, why the heck am I going to go there? Right? 15, $20. It's like, bro, what am I even coming here for? Right? I come here so I can get a McChicken and a McDouble and roll out and not have to think about the fact that I just put this crap in my body anyways. I don't want to pay higher prices for food that I know is literally going to provide me no nutritional value. Like, let me give you $5 and let me hit the road, and you take advantage of the fact that you've got more people coming there because of that, because then people will just stop going. And that's what happened to McDonald's, right? McDonald's saw that in their earnings report. There were not as many people going to McDonald's, and they're like, what the heck? Usually we make more money like during recessions and periods of high inflation. And it's because you've been raising your prices just as much as everybody else, right? So that appeal is gone. And they brought it back with the $5 deal meal, which I pointed out, here during these sessions as a good strategy, right? A good strategy. And you see everybody else following up with it here, following along with McDonald's lead. And McDonald's was actually, technically in a very similar spot. When I say technically, I mean charts wise, in a similar technical spot to Starbucks. Right, a similar technical spot that McDonald's was in to Starbucks, and McDonald's honestly still not looking too bad right here, depending on what type of movement we get. If we can get over a certain level on the daily, McDonald's looks like it can run again, but that's TBD, right? TBD. We got to get over that level first. But yeah, price wars, I feel like everybody's in favor of it. Everybody's in favor of it because it's better for us. So I'm not somebody who, likes to frequent McDonald's. But if I'm running around and I got a lot to do, it is nice to be able to pull through and say, especially when I'm a big like make food at home type of person, to say, okay, I don't want to be eating out to begin with, right? And I also don't want to be eating this crap and paying a lot of money for it. So I don't feel bad that I can swing through and get a little $5 meal and be on my way, and then I'll just worry about trying to run it off or something during the next run. Which I was back on the horse today, which is nice. Patting myself on the back. It's been the heat wave, and then we had the freaking tornado watch and the storms nonstop, and then between that we had Stevie and trying to juggle that schedule. So it's been a lot, but you gotta share things with your people so that they help keep you accountable and you share your wins and you also share your not wins as well, say like, oh man, I wish this would have gone better, but all that helps, right? The community helps push you forward. So ask me if I did it again tomorrow because that's my aim. Today's markets in Asia, Japan up 3.5%, Hong Kong up 0.4, China up 0.3, India down 0.9. In Europe, the FTSE in London down 0.2, Paris down 0.3, Frankfurt down 0.1. In terms of this was before the data got released, so it's not really relevant because we got PPI data this morning, and the PPI data, I believe, was better than expected. Producer prices slow more than expected in July, right? So we got 2.2% of an increase in terms of year over year versus 2.3% estimated. So it wasn't a huge beat. And you can see that we sort of reacted to it, but it wasn't a very big reaction. And if you guys, that are in the trading group, you see exactly where we pop to. Where do we pop to and reject? That 536.90 level, right? That 536.90 level, it's been on our charts since last week, and I talked about it yesterday, and of course I'll talk about it here today. So we'll see, can we get above that level and push above it? And if we can, then SPY might be out of the woods. If we can't, then SPY still remains deep. Ow, I just scratched a scratch that I had. Then SPY still remains deep in the woods. And this bear flag possibility still remains alive and well. So, yeah, in terms of the PPI data, PPI has never typically been a mover very much. People are much more concerned with the CPI data rather than PPI. It's also important to point out that you might say, Adam, well, if CPI data was better than expected, doesn't that mean that if PPI was better than expected, doesn't that mean CPI will be? No, right? They've diverged before. That has caught us, right? Caught us slipping before where we got the CPI data and then we expected, or we got the PPI data, we expected CPI to follow it and it wasn't, right? PPI was better than expected and CPI was worse than expected. So you can have diverging figures, right? Where those things do not have to be one and the same. So don't make the same mistake where you go and you say, again, that's what, paying for experience that you don't have to experience yourself is worth its weight in gold. Because I can say, yeah, I did this, right? I tried it. I'm clever. I'd like to think I'm pretty intelligent. I try things, right? That I think, oh, this could be a clever thing to try. And you recognize, okay, well, that's not always the case. So it can follow where both things, end up the same. I'd say more often than not they do, but they do diverge and they have done so, recently. So don't put all your eggs in that basket, but we'll see. Can we get above this 536.90, right? This 536.90, 537. We've just been bleeding up toward it. That's been, the strong line in the sand, and we've had, volume going down every day as we've gotten closer to it on the buying side, right? And just general volume. We'll see if we can do anything fun today, right? If we get above it, if we get beneath it. We have CPI data tomorrow, so that's going to be the biggest of them that the market will react to the most. So, do I expect a big move today? Maybe not as much. We could get kind of the same chop that we have been getting. We'll see. I can't see the future, but I'm just saying if we have the biggest data tomorrow, I don't think we'll get huge volume here today. Just doesn't seem likely. And then today's economic calendar. Remember, the Fed Bostic is speaking at 1:15 p.m. But other than what's his name, every like few months, and then Powell, nobody from the Fed really makes the market move. What else is happening? We'll finish up here with a rapid fire stock news rundown. J and J, ticker J and J, said to make headway in setting talc baby powder litigation or settling talcum baby powder litigation. NASA watchdog finds quality control lapses in Boeing, ticker BA and SLS work. Scotiabank, ticker BNS to buy 14.9% stake in Key Corp, ticker KEY for 2.8 billion. Judge rules against RFK Jr. in fight to be on New York ballot. Marathon Digital, ticker Mara, dips on proposed $250 million debt offering. LL Flooring, ticker LL, files for Chapter 11 bankruptcy but secures financing. Oxy Petroleum says Crown Rock launches sale of 30 million shares. Marathon Oil investor sues to block ConocoPhillips deal. And then are the Magnificent Seven a better hedge than the overall S&P 500? So I guess that was some survey that they put out. But yeah, that wraps us up and puts a bow on us here for August 13th, 2024. Let's watch and see what the market does in this important area. We've got this whole zone, on the daily where we're primed for rejection. And so far, we haven't gotten any buying volume in order to get us above that level. If we do, cool. We retrace, right? Retrace, regroup, and we position for the next thing. But as of right now, it's just a waiting game, a patience game, and a managing risk game. And that's exactly what we want to see here. because before this data, so I tried to move higher, and then what happened? In one, hour candle, we lost all of that and came right back down to where we closed yesterday. And then now, based off of the data, we pushed a little bit higher, but we're still sitting underneath that 536.90 level. So that level, is an important level, and we'll watch to see how we behave around it. You know, and other than that, let's crush it. Starbucks set to pay very nicely here on these leaps at open, and also pushing above another, important level, another level of note. So excited for that to cash out on Starbucks, and then we'll see if SPY wants to join the pay party or not. Stay tuned. Big data tomorrow. I'll be here for that, right? Our next pre-market prep session. Have a good rest of the day, and I'll see you there. Peace.